And I'll tell you.
All right, well, on a day when Warren Buffett is the focus in Omaha, we've got an investor some have compared to the legendary Oracle of Omaha. In fact, Jay Bowen is called the Oracle of Tampa for his stellar investment career, running the Tampa Police and Firefighters Pension Fund. Jay is here with us at Lincoln Center. Welcome. It's great to welcome you back to the halftime show and in person at that.
Thank you. I hope I'm too young to be an Oracle. My father qualifies. I need 20 more years at least.
It's great to have you here. What are your thoughts on the markets? It's been several months since we've heard from you.
It has. We're top down and thematic, and we continue to think that the monetary theme is going to dominate. In terms of global accommodation. If you look at the Yellen Fed, we think they're very focused on, implicitly at least, targeting nominal GDP. In Europe, Draghi and the ECB are very concerned about the value of the currency and also these deflationary whiffs that keep hanging around. Japan, Abe is going to have to counter this VAT increase with more monetary easing. China is faced with falling producer PPI prices and also a currency issue with Japan. So with that broad backdrop in terms of global accommodation, that's very much a positive. Now, when you work your way into our market in the U.S., if you look at historically, if you look at the bull markets, long bull markets, 5 years plus of the last 30 years, there have been 3 of them. This is the 4th. We've got a lot of the similar characteristics in terms of a relatively steep yield curve and reasonable valuations, healthy skepticism. The international situation is what might vary some, but I think we can do fine here, and basically it's not a raging bull. I view it as more of a slow bull where the market can approximate earnings growth plus dividend income really is what we're looking for.
Investors sort of raise the flag as we were just speaking to about a potential bubble in certain aspects of the stock market. What are your thoughts on that? Is there a bubble in parts of the NASDAQ specifically?
You know what? We think the bubble's on the fixed income side. We think the bubble's on the bond side. As far as the NASDAQ, I really like these rolling valuation corrections that we've had this year in certain areas like the biotech and social media. I think that's healthy. Valuations are still reasonable. The bond side's a different animal. As long-term top-down investments, we think the overwhelming theme over the next 5 to 10 years is how the Fed unwinds their balance sheet. And we've come up with this term. I think there's a confederation of inflationists that are developing that want higher inflation, including the Yellen Fed. So our job longer term is trying to figure out how to position the portfolios to protect our clients from that.
Interesting from your stock selections, and you've made a number on this program in the past, but you certainly must be bullish on the U.S. and globally if you're picking industrial cyclical names such as 3M and Honeywell. Those are 2 of your newest selections. Talk to me about 3M first. Why do you like it right here?
Yeah, we are looking for premier industrial companies, and those 2 fit the bill on a variety of fronts. 3M is really interesting. They've shown over the last 5 years their ability to outperform the market. They've got a management that is really much more shareholder friendly than in the past. They've really geared that up in terms of, if you look at, for instance, the dividend increase. They just increased their dividend by 35%, reduced share count by 4% over the last year with stock buybacks. But at its core, it's a highly innovative tech company with a robust flow of new products. Jay, so we like that.
I'm curious, though, on something like that, and all of your industrial picks for that matter. Do you need the international markets to cooperate? We just saw the 4th decline in a row for Chinese PMI, for example, overnight. We're getting mixed signals from Europe, and Latin America seems to be out of this particular cycle entirely. Can these stocks continue to work if the U.S. growth rate stays where it is and we get no cooperation overseas at all?
I think that they can work if you look out 5 years, for instance, if you take a 5-year approach. The 3M, for instance, if you look at their projections looking out, and again, management has become so much more shareholder friendly. They're so diverse from not only a product standpoint, but from a global. They're in over 70 countries. And China, you mentioned China, if you had to pick one major U.S. company that is the premier China play, I would say it's 3M. They expect more revenues to come from China in the next 10 years than the U.S. So very shareholder friendly and very globally oriented with a really high quality flow of new products.
I'd like to ask you a question about activism, since we're going to have some activist investors in the house here today, and you're a long-term investor. Do you own Coke shares?
We have my father actually purchased Coke for the fund for under $1 a share back in the 70s. We have a small position. We favored PepsiCo over the last 25 years. We favored PepsiCo over Coke because of the product mix, and particularly the powerful global snack food franchise. Coke, I think that the dilution issue is legitimate to be talking about, that has been raised recently. But I think, to me at any rate, the main problem with Coke is the product. I think they've got a 20th century product in a 21st century Whole Foods type of world. And so I think that looking out, I think the core product is more of a problem than this dilution debate.
What's your take just on activism in general? Long-term investing versus what some have called short-termism?
Yeah, I think that there's a place for it. I think it can be healthy and productive in terms of raising legitimate issues. Management can become very stodgy at times. And one of the reasons 3M and Honeywell are on our screen right now is the management. We think management is exceedingly important in this kind of tough operating environment. When the economy is growing at 4 or 5% in real terms and they're cranking out double-digit earnings increases, it can mask some inefficiencies in management. The last few years, our operating environment has been very tough. And Honeywell and 3M both have proven that they can operate in that environment.
Jay, it's great to see you in person, and welcome back to the Halftime Show. We look forward to speaking with you again soon.
Thank you very much. Great to see you.
Okay, Jay Bowen again. Still ahead, Carl Icahn calling out Warren Buffett.